Gold surges to new all-time highs today, and Bitcoin is once again banging on the $68,000 resistance level. Honestly, is there a more bullish chart on the planet than Bitcoin right now? I'm bringing back the delirious bull for today's video as we look at all the data pointing to an imminent explosion in Bitcoin, not seen since, well, 4 years ago. Plus, we take a look at Michael Saylors' latest interview where he explains the infinite money glitch his company MicroStrategy stumbled on with Bitcoin and why he sees it as a vehicle for revolutionizing capital markets. Welcome to Pure Bitcoin Signal. I'm Hurley, Director of Content at Swan. Now let's get into it. As mentioned in the intro, gold has rocketed to new all-time highs today once again, as the shiny metal continues its strong run in 2024, up 26% year to date. Bitcoin is also up today as it continues to bash on the door of the $68,000 resistance level. And as I said in my last video, once we close above the $68,000 level on the daily, watch out for some fireworks. Because as history shows, gold typically rallies first and Bitcoin follows, eventually overtaking it. Take a look at this chart showing their respective rallies in 2023 and 2024. What do you think happens next with Bitcoin? And just look at the Bitcoin chart right now. All you chart bros, have you ever seen anything so bullish in your life? We've been here before, ladies and gentlemen. Bitcoiners have been trying to tell you that this similar setup happens every 4 years since the Genesis block in 2009. Take a look at this chart, which overlays the current Bitcoin price, represented in black at the bottom, with the historic price charts following the previous 3 Bitcoin halvings. Again, what do you think happens next? Even if we track with the diminishing returns of the last cycle in 2021, we're looking at a $300,000 to $400,000 Bitcoin. ETF inflows have been steadily increasing as well, reaching the strongest levels since July. We also have whales accumulating at levels we have never seen before. For those that don't know, whales are extremely large holders of Bitcoin, typically in and above the thousands of coins. Entities like early adopters, institutional companies like MicroStrategy, and even nation states. They're all stacking at unprecedented levels right now. Again, what do you think happens next? And speaking of MicroStrategy, the latest Michael Saylor interview dropped yesterday, and it's a doozy. In it, he explains what exactly his company is up to with their Bitcoin strategy. It's always best to hear it from the horse's mouth, so roll the clip.
Really, MicroStrategy is pioneering a new market. We're issuing securities backed by digital capital, backed by Bitcoin, and then we're buying the Bitcoin back. So what that means is I could issue the bond in 1 week, buy the Bitcoin, capture the $300, $400, $500 million gain, announce it to the market, the stock would trade up. I could do another bond the next week. In the first quarter, we did an $800 million convertible bond. We bought Bitcoin, the market liked it. The very next week, we went back to the market, did a $600 million convertible bond, bought more Bitcoin. It was accretive, the market liked it. So what we do, we went back the next quarter, we did another $800 million bond, we bought Bitcoin, the market liked it. In the middle, we sold hundreds of millions of dollars of equity. And the next quarter, we sold more equity. We sold 1.1 billion of equity in Q3. We basically did that at a massive premium, so we captured a large BTC yield. We announced that, the market liked it, and then very next week we did a convertible bond, and that became $1 billion convertible bond. And so what you see is we're running a very rapid investment cycle. We're developing a city in cyberspace. We call that city Bitcoin. So the real MicroStrategy business is to be the leading public issuer of securities in order to acquire Bitcoin. And as we acquire the Bitcoin, we're driving up the scarcity of the Bitcoin. We've now bought more than 1% of the Bitcoin.
And so far, this strategy is clearly working very well for them, as they've outperformed every single company in the S&P 500 in 2024. Saylor was also asked about the increasing short interest in MicroStrategy stock, and he answered by basically saying, bring on the shorts.
But when I was a younger man, I would have been concerned about people shorting my stock. But now I'm not, because MicroStrategy is really just providing a set of institutional instruments that institutional investors can use to tailor a portfolio that's long, short, hedged. They can sell the volatility, they can arbitrage the volatility, they can arbitrage any instrument against any other instrument, they can generate yield, they can buy insurance. Some of those people that are short, they'll short $1 billion of MicroStrategy and they'll buy $1 billion of Bitcoin. And so if we didn't exist, then billions and billions of dollars of capital from the traditional finance markets wouldn't be invested in Bitcoin because they can't buy or hold the underlying crypto asset. They can only buy securities or bonds or options or other instruments. So we become an institutional gateway for crypto exposure by all types of investors. And my real aspiration now is, if you really hate Bitcoin, I want you to love us. Like, we're the perfect instrument to short, right? Because I promise you I won't sell it.
So Bill Gates, I know you said a couple years ago you'd short Bitcoin if there was an easy way to do it. Now there is. So put your money where your mouth is. Saylor also gets into a pretty original analogy where he compares MicroStrategy to an oil refinery, in that it's a refinery for crude capital. And he gets into why the company is totally unique and no other company can catch them in their Bitcoin strategy.
Standard Oil created the oil business, so I give you a petrochemical refinery and think about what goes in one side. It's crude oil. What comes out the other side? Gasoline. Why do you put gasoline in the car? Because that's the only thing that works. Kerosene. What do you put that in? Jets. That's jet fuel, right? What? Propylene?
Bitumen
benzene?
goes in paint, or another product that comes out
All
of
of those petrochemical products come out this side. The refinery does a lot of work, and in comes crude oil. So think of MicroStrategy as we take in crude capital. There's no doubt it's the best performing asset in 15 years. It's theoretically the best form of capital is digital capital. It's just scary to a lot of people. It's too volatile, it's too difficult to manage, so they want someone that can, domesticate it, step it down, package it in safe components, and then connect it into the fixed income market, the high yield market, the convert market, and the public equity markets. And MicroStrategy, we just inadvertently backed into that, because to do what we did, you have to start with a very small company, $1 billion company, and then we become a $40 billion company, and now we're 150% Bitcoin. So if you take another $1 billion company and do what we're doing, you can't catch us, because at this point we can grow $5-10 billion a year in capital or faster. You can't catch us if you start with the same thing. But if you take a big company like Google or Meta or Microsoft or Apple, and they bought 50 billion of Bitcoin, well, that would be good for Bitcoin, and that would be good for their shareholders. And if Apple did it a lot, they might add $1 trillion to their market cap. But it would be $1 trillion on top of $3 trillion. So at the end of the day, Apple would be an enterprise, 25% Bitcoin, 75% Apple. MicroStrategy is an enterprise, 150% Bitcoin. So how do you create a company which is 150% Bitcoin that can sell billions of dollars of fixed income instruments or billions of equity into the market with a permanent capital base that's going to oscillate, it's going to vibrate with the frequency of Bitcoin, right? That is, I'd love to say we had the idea 4 years ago and that's what we were trying to do. No, we just kind of stumbled onto just a really great business.
Then Saylor was questioned about what is often referred to online as the infinite money glitch.
This whole conversion, financial engineering type strategy is often referred to online as the infinite money glitch.
See, the misnomer there is it's not a money glitch. It is a digital transformation of the capital markets. When you have a system that moves from a higher energy state, a more disordered state, to a lower energy state, lots of energy gets given off. Think of steam becoming water. Like, is it a money glitch? It's just steam becoming water and it condenses. So if you look at the capital markets, you've got $800-900 trillion of wealth in the capital market. You've got people invested in all these heterogeneous assets. Of the 900 trillion in capital in the global capital markets, half of it is just long-term store of value, long-term capital. That is pure capital. People with money just want to keep their money. Rich just want to stay rich. That 450 trillion is invested in buildings that are rusting. It's invested in cars, it's invested in fleets, it's invested in things that suffer from 20th century risk factors. So you've got that 450 trillion on one side, and then you've got 1 trillion digital capital. It's like, well, I had a building, I get rid of all the things that make the building a problem, and I make it an invisible, immortal, indestructible, teleportable digital building.
That'd be cool.
Okay? Well, that's what Bitcoin is. So this thing that people think of as a glitch, it's not that, it's energy flowing from a steam state, from highly disordered, inefficient, bouncing into each other, into a more ordered state. That's basically the free market. It's capital flows to where it's treated the best. And so if I have capital, in Argentina, I would put it in the US. And if I have capital in the dollar, let's take the dollar. 100 years ago in Miami Beach, an acre of land on the waterfront cost $10,000. Today, $10 million. The dollar lost 99.9% of its value against real estate, waterfront property in Florida. Okay, is that a glitch? Right? And the peso lost 99.9% of its value against the dollar in 20 years. Is that a glitch? That's really just capital flowing from a weak asset to a middling asset to a stronger asset. And Bitcoin's advance is capital flowing from 20th century analog assets, financial and physical assets, to the 21st century digital economy.
I just love his explanation there. Bitcoin isn't a glitch. It's simply the massive amount of global analog capital flowing into a much stronger global digital asset. And to better understand the total addressable market that Bitcoin is poised to swallow up, take a look at this graphic from Jan 3, which shows the available capital in the world represented by that huge green inverted triangle on top, and the tiny black upright triangle in the middle representing the remaining available Bitcoin. In theory, all of that capital has to squeeze into that tiny black triangle if Bitcoin is to win as the apex money. And this is exactly why what MicroStrategy is doing seems like a glitch. It's not a glitch. As Saylor says, they have simply just stumbled on a business model that makes them a vehicle for capturing that capital and funneling it into the digital transformation that Bitcoin represents. So regardless of your thoughts on MicroStrategy, one thing is for sure, it's extremely good for Bitcoin, just like the ETFs are. Because again, as Saylor says,
if you look at where all the money is, 99.9% of the money is actually in the traditional economy. And in the war for the future of money, the war's going to be won with money.
I just love how Joe Burnett frames it in this post on X. He's taking the amount the US federal government borrowed just last week, but priced in Bitcoin at today's value. Just last week, the United States federal government borrowed another 7.7 million Bitcoin. This is not sustainable. It seems inevitable that the price of Bitcoin in USD will increase massively given there are only 21 million coins. So if you take Saylor's musings on the flow of capital going from weaker assets to the strongest in the world, it's plain to see that Bitcoin is extremely undervalued here. I hear a lot of new Bitcoiners obsessing about their entry price, waiting for that perfect dip that just never seems to materialize. I get it. I was there when I was new too. The fact is, getting in at 69K or 59K is going to be meaningless when you account for how high this thing can go. You need to get out of the trader mindset and think of this as a long-term hold. Minimum 5 years, but the longer your time horizon, the better. So stop waiting for that magical entry price and just get off zero today. And you can do that with Swan. Visit swan.com or download the app by searching Swan Bitcoin in your app store. We have put tons of time into making this the easiest and fastest onboarding experience in the industry. You can literally go from sign up to buying and sending real Bitcoin to your own wallet within minutes. Plus, your first $10,000 in Bitcoin purchases will have zero fees. So visit swan.com and get off zero today. And before we wrap, I got one last bullish thing I got to show you. Many of you have probably heard people compare Bitcoin to the internet. It's often referred to as the internet of money. Why is that? Well, if you look at this chart, which compares internet users to Bitcoin users over time, you can see that Bitcoin adoption is actually outpacing internet adoption. And if this trend continues, which all signs point to it definitely continuing, if not increasing, and everyone is chasing less and less Bitcoin due to its absolute scarcity, what do you think this means for the Bitcoin price? Okay, that's it for today. Let me know what you think of Saylor's wild analogies. Don't forget to like this video if you made it this far, share it with friends, and of course, subscribe to the channel for more Bitcoin Signal. Thanks for watching, have a great weekend, and remember, TikTok, next block.